Forced home sales are not some future headline. They're already starting. They're just happening quietly, behind closed doors, in places you don't see on the news. And if you own a home in the UK, especially with a mortgage, this should make you uncomfortable. Because forced sales don't begin with panic. They begin with silence. They begin with people redoing the same numbers over and over at the kitchen table, hoping they made a mistake. They begin with emails from lenders that look polite, calm, and harmless until you read them twice. They begin with couples stopping mid-conversation when money comes up because neither wants to say the word out loud. Sell. For years, homeowners were told one thing: if you get on the ladder, you're safe. If you lock in a mortgage, you're protected. If you own property in the UK, you'll be fine. That belief is cracking, not because people were reckless, not because they borrowed irresponsibly, but because the ground shifted underneath them. Mortgage payments are jumping by hundreds, sometimes thousands a month. Energy bills didn't fall back to normal, food costs never came back down, and wages didn't rise enough to cover any of it. So now, something new is happening. Homeowners who never imagined selling are quietly preparing for it. Not to upgrade, not to downsize, to survive. And that's what makes forced sales so dangerous. They don't look like a crash at first. They look like personal decisions. A family selling because it's the right time. A couple moving because plans changed. An owner listing because we want flexibility. But behind those words is pressure. And that pressure is spreading. Here's the uncomfortable truth. Most forced home sales don't happen when prices fall. They happen when payments rise. And payments have risen faster than most people were ever warned about. People who fixed mortgages at low rates are now hitting renewals that double their monthly cost. Not a bit more, not slightly tighter, double. For many households, there's no amount of cutting back that fixes that. No cheaper phone plan, no fewer meals out, no skipped holiday. You can't budget your way out of a mortgage shock that large. So people start making choices they never thought they'd make. Selling the family home, moving far away from work, pulling kids out of schools, all to keep afloat. This isn't theory, this is already happening. But here's why most people don't realize how serious this is yet. Forced sales don't come with sirens. They come one by one. And because of shame, fear, and pride, people don't talk about them. Homeownership is tied to identity in Britain. Losing a home feels like failure, even when it isn't. So people keep quiet. They don't post about it. They don't tell friends. They don't go public. They just disappear from their old lives. And that silence hides the scale of what's coming. Another reason this is being missed is because homeowners still look better off on paper. They own something. They have an asset. But assets don't pay monthly bills. And when your home becomes a liability instead of a shelter, everything changes. People stop seeing their house as security. They start seeing it as a risk. That shift is huge, because once enough homeowners think that way, markets don't stay calm. They freeze. People stop upgrading, they stop moving, they stop spending. And when some are forced to sell into that frozen market, the damage spreads fast. But here's the part that really matters. Forced sales don't just hurt the people selling. They affect everyone. Neighbors see listings appear that never would have before. Buyers sense desperation. Prices soften quietly, and confidence starts to crack. Confidence is everything in housing. Once it goes, it doesn't come back easily. And we've seen this before. Not in the exact same way, not with the same triggers, but with the same pattern. Rising costs, households stretched thin, quiet exits, delayed recognition. By the time everyone agrees something is wrong, the damage is already deep. That's why this matters now. Because the UK housing market doesn't need mass repossessions to break. It only needs enough people forced to sell for reasons they can't control. That's already happening at the edges, and edges move inward. Another uncomfortable truth is this: the people most at risk aren't always the ones you expect. It's not just recent buyers, it's not just risky borrowers. It's families who bought years ago and assumed stability. It's older homeowners on fixed incomes. It's people who did everything right. That's why this moment feels so unsettling. The safety net people relied on is thinner than they thought. And the reason this hasn't exploded into public debate yet is simple. Politicians don't want panic, banks don't want fear, markets don't want headlines. So the language stays soft. adjustment, normalization, short-term pressure. But when pressure lasts long enough, it stops being temporary. It becomes structural, and structural pressure produces forced outcomes, forced sales, forced moves, forced life changes. This video isn't about predicting a dramatic crash tomorrow. It's about explaining why forced home sales are coming quietly, and why most homeowners are not ready for what that actually means. Because once this starts to spread, it doesn't stop neatly. It ripples through families, through streets, through entire communities. And the scariest part? By the time it becomes obvious, it's already too late to pretend this was just a few bad cases. This is the point where the story changes. And if you own a home in the UK, you need to understand what's happening before it reaches you, not after. Most people think forced home sales only happen when someone completely messes up. They picture missed payments, bad decisions, or people who stretch too far. That picture is outdated. What's happening now looks very different. Forced sales today aren't about recklessness. They're about pressure stacking up slowly, then all at once. This video isn't here to scare homeowners or tell you to panic. It's here to explain what's actually changing and why so many people are unprepared for it. Because the truth is, forced sales rarely look like repossessions at first. They look like downsizing. They look like moving closer to family. They look like simplifying. But behind those phrases are people reacting to costs they can no longer control. That's why this moment matters. For years, the UK housing market has been built on the idea that owning a home equals safety. That belief shaped how people borrowed, saved, and planned their lives. Now, that belief is being tested. Rising interest rates didn't just make borrowing more expensive. They changed the rules of the game. People who locked in low rates thought they had certainty. What they actually had was a pause, and now that pause is ending. At the same time, living costs never returned to where they were. Energy, food, council tax, insurance, all of it piled on. So households that look stable on paper are suddenly tight in reality. That gap between paper safety and real life is where forced sales begin. This video will break the whole thing down step by step. We'll start with what forced sales really look like today. Not the dramatic version people imagine, but the quiet one that's already happening. Then we'll look at why this pressure is building now, how policy and past decisions led here, and why this isn't just about interest rates. We'll also look at what this means for the wider housing market, for prices, and for people who think this can't affect them. Because forced sales don't stay isolated. They spread, they change behavior, they change confidence, they change markets, and they do it long before headlines catch up. By the end of this video, you'll understand why forced home sales are becoming more likely across the UK. And why waiting until it's obvious is the worst possible time to start paying attention. Let's break down what's actually happening. When people hear the phrase forced home sales, they usually picture something dramatic. Bailiffs, court notices, headlines about repossessions spiking. That's not how it starts. What's happening right now looks nothing like a crisis on the surface, and that's exactly why so many people are missing it. Today's forced sales are quiet. They don't show up in official statistics straight away. They don't come with flashing warnings. They show up as normal listings with polite descriptions, reluctant sale, change in circumstances, moving for flexibility. Those phrases hide pressure. Behind them are households who didn't plan to sell, didn't want to sell, and didn't expect to sell, but no longer see another option. The first clear sign is how conversations have changed. People talk about selling with hesitation. They frame it as temporary or strategic. But when you listen closely, it's clear they're reacting to costs they can't control. Mortgage renewals are the biggest trigger. People who fixed at low rates now face jumps that wipe out their financial breathing room. It's not a small adjustment. It's a shock. Hundreds more each month, sometimes more. And for households already juggling childcare, energy bills, and everyday costs, that jump pushes them past the line. They don't default immediately. They cut spending. They use savings. They delay everything. But savings run out. That's when selling becomes the sensible option, not because they want to, but because staying feels riskier. Another sign is the rise in urgent listings, homes priced to sell quickly, sudden drops after weeks on the market, sales that happen quietly, without celebration. These aren't upgrades, they're exits. Another proof point is where these sales are happening. Not just in overheated city centers. They're appearing in ordinary suburbs, commuter towns, family areas, places that were supposed to be stable. That's important. Forced sales spreading into these areas means pressure has moved beyond the edges. Another sign is who is selling. Not speculators, not reckless buyers. Families who bought years ago. People with decent incomes, older owners on fixed budgets. People who thought they were safe. That's proof this isn't about bad decisions. It's about changed conditions. Another indicator is how long people wait before selling. They delay as long as possible. They try interest-only periods. They negotiate with lenders. They cut back hard. Selling is the last step. That tells you something. If selling were easy or profitable, people wouldn't hesitate. The fact that they do and still sell shows how strong the pressure is. Another quiet sign is how people talk after they sell. There's relief, but also grief. They talk about losing a home, not leaving one. That language matters. People don't talk that way about voluntary moves. Another sign is what's happening behind the scenes with lenders. Banks aren't repossessing aggressively. They don't want headlines. Instead, they encourage sales. They offer short-term fixes. They suggest restructuring. They quietly push responsibility onto homeowners. This spreads sales out over time. It avoids panic, but it increases duration. Another proof point is how estate agents describe the market. Less talk of bidding wars, more talk of realism, more listings hanging around, more sellers testing the market. That hesitation signals stress. Another sign is what buyers are doing. They're cautious. They're negotiating harder. They're waiting for weakness. When buyers sense forced sales, confidence shifts, and that shift affects everyone. Another indicator is the emotional toll. People selling under pressure don't celebrate. They're quiet. They're withdrawn. They're embarrassed. That shame keeps this invisible. People don't tell friends until after it's done, if ever. That silence is why forced sales feel rare, even when they aren't. Another proof point is how quickly situations change. 1 year stable, next year overwhelmed. There's no gradual warning. That unpredictability is new for many homeowners, and it scares people. Another sign is how often selling solves one problem but creates others. People sell to escape mortgage stress, then face high rents. They move closer to family but further from work. They downsize and lose space. Forced sales don't restore stability. They trade one risk for another. That's not choice. That's constraint. Another indicator is how similar stories sound across the country. Different towns, same pattern. That repetition tells you this isn't isolated. It's systemic. Another sign is how long this phase can last. Forced sales don't peak quickly, they trickle, month after month. That slow drip is more damaging than a sudden spike because it erodes confidence over time. Markets can recover from shocks. They struggle with slow, grinding pressure. This is the stage the UK is entering now. Not a crash, not a recovery. A pressure phase where more households quietly exit than anyone expected. And because it doesn't look dramatic, it doesn't feel urgent until it reaches someone you know. That's the proof. Not in headlines, not in forecasts. In behavior, in hesitation, in silence. In ordinary listings hiding extraordinary pressure. This is what forced sales look like today. And understanding this is crucial. Because once you see how quietly this starts, the next question becomes unavoidable. Why is this happening now, and why are so many people unprepared for it? Unprepared. To understand why forced home sales are starting now, you have to look at timing. Not just what changed, but when it changed. Because this isn't one shock. It's several pressures landing at the same time. For years, low interest rates acted like a cushion. They made high house prices manageable. They kept monthly payments low. They gave households room to breathe. People didn't just borrow more because they were reckless. They borrowed more because the system told them it was safe. Rates stayed low for so long that they felt normal. Mortgage deals were built around that assumption. Life plans were built around that assumption. Then that assumption ended. Interest rates didn't rise slowly. They jumped, and they jumped after millions of people had already locked into mortgages that were about to reset. That timing matters. In the UK, most homeowners don't have lifelong fixed mortgages. They fix for a few years, then renew. Those renewals are now arriving in waves. People who fixed at very low rates are hitting renewals that look nothing like what they signed up for. Monthly payments increase sharply. Not by tens, by hundreds, sometimes more. That alone would be difficult. But it didn't happen in isolation. At the same time, everyday costs surged. Energy bills rose and never fully came back down. Food prices jumped and stayed high. Council tax increased. Insurance went up, so households didn't just face higher mortgages, they faced higher everything. This is where budgeting breaks down. People try to cut back, they cancel subscriptions, they stop eating out, they drive less. But mortgage increases don't shrink. They're fixed, they arrive every month, they don't care how careful you are. That's why this pressure feels different. In the past, people could adjust. Now, there's nowhere left to cut. Another key factor is wages. Wages didn't rise enough to absorb these shocks. Some people got small increases. Many didn't. So the gap between income and costs widened fast. That gap is where forced sales are born. Another reason this is happening now is that safety nets were thinner than people realized. Stress tests assumed rates would rise, but not this fast, and not alongside such high living costs. People passed affordability checks on paper. In reality, they're stretched. Another timing issue is inflation. High inflation eats savings quietly. People dip into savings to cover gaps. At first, that works. Then savings run out. That's when selling becomes unavoidable. Another factor is how psychological this is. People can cope with temporary pain if they see an end. But this feels open-ended. Rates might stay high, costs might not fall. That uncertainty changes behavior. People don't want to gamble. Selling feels safer than waiting. Another reason this is happening now is that housing market slowed. People assumed they could always sell easily if needed. Now buyers are cautious. That makes selling riskier and more stressful, which is exactly when some people are forced to do it. Another issue is how quickly life changes. Illness, job changes, family needs. These normal events become crises when costs are high. What used to be manageable becomes overwhelming. Another factor is how concentrated this wave is. Millions of mortgages resetting within a short window. That creates a surge of pressure. Not everyone sells, but enough do to shift the market. This isn't a coincidence, it's timing. Another important point is that policy responses lag. Rates changed quickly. Support didn't. People were told to wait, to be patient. But bills don't wait. Another reason this feels sudden is because people believed the worst was over. Pandemic disruptions ended, life resumed, then housing costs exploded. That whiplash matters. People weren't mentally prepared. This combination, rising rates, high living costs, flat wages, and delayed resets, explains why forced sales are emerging now. Not because people failed, because timing failed them. And this is why the next stage matters so much, because once forced sales start, they don't stay contained. They affect prices. They affect confidence. They affect everyone. That's what we need to look at next. What happens to the housing market once forced sales spread beyond the edges, and why that reaction is what most homeowners aren't ready for. Housing markets don't react to forced sales the way people expect. There isn't a sudden drop. There isn't instant panic. What happens first is hesitation. Buyers hesitate. They see more listings appearing that don't look optional. They notice price cuts that weren't common before. They sense that sellers are under pressure, so they slow down. They ask for discounts. They delay offers. They wait for better conditions. That hesitation changes demand. At the same time, sellers hesitate too. Homeowners who don't have to sell look at the market and think, now isn't a good time. So they pull listings. They delay moves. They stay put. That creates a freeze. More homes need to sell. Fewer people want to buy. And many who could sell choose not to. This mismatch is dangerous because forced sellers don't get to wait. They list anyway. And that shifts the balance. Another change is how long homes sit on the market. Listings stay up longer. Price reductions become common. Agents talk about realistic expectations. These aren't dramatic signals, but they add up. Buyers start to believe they have leverage. That belief alone changes behavior. Another reaction is how chains break. In normal markets, sales link together. One sale funds the next. Movement flows. In a pressured market, chains snap. People pull out. Deals collapse. Uncertainty spreads. This slows everything. Another key reaction is emotional. Confidence cracks quietly. People stop assuming property always goes up. They stop assuming selling is easy. They stop assuming homeownership equals safety. That mental shift is powerful because housing markets run on belief as much as money. Another effect is how valuations adjust, not suddenly, gradually. Forced sales anchor lower prices. Those prices affect nearby homes. Appraisals become cautious. Even homeowners who aren't selling feel this. They see estimates fall. They feel poorer on paper. That affects spending. People spend less. They delay renovations. They avoid risk. The wider economy feels it. Another reaction is investor behavior. Some investors sell early. Others hold back. Rental supply tightens or shifts. This adds pressure elsewhere. Another sign of confidence cracking is language. The tone changes, optimism fades, caution dominates. That shift spreads faster than prices ever do. Another reaction is what doesn't happen. Upgrading stalls, downsizing stalls, movement stops. This hurts everyone. First-time buyers struggle, families feel stuck, older homeowners can't move. The market becomes rigid. Another danger is how freezes prolong pain. Prices don't fall enough to reset affordability. Costs stay high, pressure continues. That's worse than a quick correction, because stress lingers. Another reaction is psychological contagion. Stories spread. People hear about forced sales. They worry they could be next. That fear shapes decisions. Fear doesn't need numbers, it spreads on stories. Another impact is on lending. Banks become cautious, criteria tighten, deals slow. This reinforces the freeze. Another outcome is that selling becomes emotionally draining, even for those not forced. That discourages movement further. Another key point is that this phase often lasts longer than people expect. Markets don't snap back easily once confidence cracks. It takes time to rebuild trust. This is why forced sales are such a big deal. Not because of volume alone, but because of what they do to belief. Belief that homes are safe. Belief that selling is simple. Belief that tomorrow will be easier than today. Once those beliefs weaken, markets behave very differently. That's where the UK is heading. Not into chaos, but into caution. And caution, when widespread, changes everything. The final question is where this leads if it's ignored. Because history shows this phase doesn't just fade away. It either stabilizes with support or deepens into something harder to escape. That's the warning homeowners need to understand next. When systems fail quietly, the biggest mistake people make is assuming silence means safety. It doesn't. It means the damage hasn't reached the surface yet. That's the danger with forced home sales in the UK right now. They're still small enough to dismiss, still scattered enough to explain away, still quiet enough to ignore. But history shows this phase never stays quiet. If forced sales continue to be treated as individual situations instead of a system-level warning, the consequences don't arrive all at once. They spread, slowly at first, then everywhere. The first thing that happens is forced sales stop being rare. What starts at the edges moves inward. At first, it's people who are already stretched. Then it's people who were just about coping. Then it's households no one expected. That's when the idea of safety breaks. Because when middle-income homeowners start feeling vulnerable, confidence across the market drops sharply. People stop assuming they'll always be able to hold on. That fear alone changes behavior. The second consequence is that selling becomes contagious. Not because everyone is forced, but because fear spreads faster than facts. People think, if prices soften later, I should sell now. Others think, if rates stay high, I won't manage next year. Those decisions pile up, and even a modest rise in forced or semi-forced sales can tip a market from stable to fragile. The third consequence is price pressure that doesn't look dramatic, but is very real. Not a crash, a grind. Prices drift down slowly, appraisals come in lower, equity shrinks. That hurts confidence even more. Homeowners feel poorer, banks feel cautious, buyers feel patient. That combination is toxic for recovery. The fourth consequence is that mobility collapses. People stop moving unless they absolutely have to. That traps families in homes that no longer fit. It traps older people in homes they'd rather leave. It blocks younger buyers from entering. Housing stops being fluid. And fluidity is what keeps markets healthy. The fifth consequence is economic drag. When homeowners feel insecure, they pull back. They spend less. They avoid risk. They delay decisions. That affects local businesses, trades, services. Housing stress doesn't stay in housing. It spreads into the wider economy. The sixth consequence is social. Forced sales don't just remove people from homes, they remove people from communities. Children change schools, neighbors disappear, support networks break. That loss doesn't show up in GDP, but it shows up in stress, isolation, and declining trust. The seventh consequence is political. When people who followed the rules feel exposed, anger builds quietly. Not always as protest, often as disengagement. People stop believing that systems protect them. They stop trusting reassurances. That erosion of trust lasts far longer than any market cycle. The eighth consequence is inequality hardening further. Those who own without mortgages stay insulated. Those with help survive. Those without buffers fall behind. Forced sales accelerate that divide. Wealth concentrates, insecurity spreads, and once inequality locks in at this level, reversing it takes decades. The ninth consequence is that solutions become harder the longer this is ignored. Early action can stabilize markets. Late action only limits damage. Once confidence is gone, restoring it costs far more, financially and socially. The 10th and most important consequence is this. Forced sales change how people see homeownership itself. Owning stops feeling like protection. It starts feeling like exposure. And when that mindset spreads, the entire housing model changes. People delay buying, they fear long-term commitments, they opt out where they can. That reshapes the future of the market. This is why forced home sales matter even if they're still manageable. Because they're not just transactions, they're signals. Signals that costs outpace stability, that risk shifted downward, that households absorbed more pressure than they were meant to. Ignoring those signals doesn't make them disappear, it lets them multiply. The UK doesn't need mass repossessions for serious damage to occur. It only needs enough quiet exits to crack confidence permanently. That's the danger point, and it's closer than many people realize. This isn't about predicting disaster, it's about understanding direction. Right now, the direction is clear. More pressure, less confidence, more households forced to make choices they never planned for. The only real question is whether this gets acknowledged early or explained away until the consequences are much harder to undo. If you want to understand what this means for prices, cities, and everyday life next, watch the next video on this channel.